healthcare plans. So seriously, think about this. You could pay off loans, pay down a mortgage, save the money for retirement, donate to charity. That would be a big deal. But you know what? Here's the best thing. Medi-Share works. It has 250,000 members, and it's growing fast. With Medi-Share,
Medi-Share does work.
I
use it.
You don't have to pay for things you don't believe in either, and that is a beautiful thing too. So here's how you can find out more, and you might actually wind up saving even more than $500 a month. So check into it. Here's the number. Call 844-41-BIBLE. That's 844-41-BIBLE. Now available in Montana. Call 844-41-BIBLE.
Individuals and businesses with tax problems, listen carefully. Do you feel like you're losing control over your finances? If you owe over $10,000 in back taxes or have unfiled tax returns, we can help you take back control. The IRS is the largest and most aggressive collection agency in the world, and they can seize your bank account, garnish your paycheck, close your business, and file criminal charges. Take control of your tax problems now by calling the experts at Tax Mediation Services and take advantage of the Fresh Start program and new laws that may allow us to negotiate a settlement for the lowest amount possible. Our team of tax attorneys and enrolled agents can stop collections and get you protected so you can take control of your financial future. Tax Mediation Services is accredited by the Better Business Bureau. Call now for a free case review and a price protection guaranteed quote. Call Tax Mediation Services now at 800-207-1265. 800-207-1265. 800-207-1265.
The following program does not necessarily represent the views
or
opinions of the staff, management, or ownership of this station.
It's time to get on the right path with Right Path Real Estate Radio with Tom Perry. Get the answer to your question that's keeping you from taking action and succeeding today.
Welcome to the show.
You have a lovely singer.
Ah, thanks.
Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Tom Perry.
Hey, welcome to the show, Right Path Real Estate Radio. We've got a busy day today on the radio. Got a busy day today just in life in general. Got a lot of things on the schedule of things to do. Got 3 radio show sponsors going to be on the radio today. We're going to start off with JB Funding. Robert, what's up? Welcome to the show.
Good morning, Tom.
Hey, good morning. How are you?
I'm doing great.
Great. What part of the country are you in today?
I'm in Southern California.
Okay, perfect. So we're going to see you on Thursday night. We're going to be with you Thursday, Friday, Saturday, and Sunday. Isn't that right?
That is right. We're going to go to Little In-N-Out Burger and make your Southern California trip complete.
Awesome. Well, tell me this. What's new in the world of JB Funding?
So we are we're off and running. Everything's going really happy. We're good here. We just started a deal in the Heights, and just to kind of explain what we got, typical deal in the Heights. The house is, distressed and left there for, probably 20 years of deferred maintenance. And we picked it up, and we were happy to report that we were able to save the garage apartment, which took that ARV up another $80,000 to $90,000.
That's fantastic.
So we're kind of doing, we're doing backflips over that one. We're very, very happy on that. And we're going around the country, and we're helping investors understand what the fund does and how they can make a 9% preferred return. So,
well, let me explain just briefly what y'all do is y'all help investors in 2 ways. Yep. One is if I'm a new investor, don't have a lot of experience with larger projects, things like that, I may go to a hard money lender or somebody like that, and they say, we'll fund 100% of it, but from a cash flow standpoint, you need to bring some money to the table. Maybe I bought it at 70% minus repairs, but I still have to come out of pocket some money. And so a lot of times when I'm starting out brand new, may not have a lot of capital. Spent a lot of money in marketing, started my business, all those things. I can actually bring you guys on as a partner and not have any money out of pocket. Isn't that right?
That is correct. We are true 100% funding.
That's fantastic. So knowing that, now that's one way to win because, we always look for multiple ways to win, win-win-win strategies, right? So the other thing that y'all do is for people that already have money, want to preserve, don't necessarily want to be actively involved, things like that. Y'all have a way for people to invest in the fund itself and get a preferred return. Tell me a little bit about that.
Sure. So we have a 506c crowd fund, and it's registered with the SEC, the federal government. It's also registered with the state of Texas. And what we're looking for is accredited investors. Now, accredited investors are folks that make $200,000 a year as an individual or $300,000 a year as a household, and have or have $1 million in assets, not including their primary residence.
So can't count the equity in your primary residence, but not counting that, have $1 million net worth, and then or $200,000 individual income or $300,000 household income. If you have any of those three things, you're considered an accredited investor. Who checks that?
We have a third party that does all the verification for us.
Got it. So it can't just not like these liar loans, as they say, where you can just say, oh, yeah, I make $1 million a year and all that. So somebody's actually going to check that. So assuming somebody checks it, you check out, and you probably know if you're an accredited investor or not, right?
Yeah, typically we say if you don't know if you're an accredited investor, then you're
probably not one. Right.
Yeah.
Okay. So
we work with accredited investors for a couple reasons. One, they're typically already investing in other areas. They understand risk. They understand they want to mitigate risk, but they're going into it open eyes. You know, there's nothing that a accredited investor really hasn't seen before, and so we're presenting it to them as, hey, this is the deal, and we lay out the deal and all the things that we do to mitigate as much risk as possible. There's always risk in real estate. Just, know it now. If you guys are just starting out or if you've been in it for 20 years, there's always risk. The longer you stay in, the more likely you're going to take a hit. And then we work with them to get the money into the fund, which is a pool. We pool people's money, which is why we use a 506c. And we offer a 9% preferred return. And then something we split the waterfall. And what the waterfall is just the profit. So we project there to be profit in our fund every year, and we split that 50-50 with the investors.
That paid on an annual basis, a quarterly basis, or how does that work?
Yeah, so for the first year of the fund, we do not give any payments. We give it at the end of that 1 year, which we're coming up to here in Houston. So the interest is paid after the first year, but then going forward, the next 3 years is paid on a quarterly basis.
Okay, got it. So how's the fund doing so far?
It's doing great.
Fantastic.
Our internal rates of returns are much higher than we expected. So we're ecstatic about what we're doing.
That's fantastic. So if you're an accredited investor, you're looking for above average returns, then what's the best way to get a hold of you guys?
Sure. So you can just give us a call. It's 281-915-0906. And if you're an investor, you hit extension 8.
Fantastic. One of the things that I like to educate, most accredited investors already know this, but if you're not accredited, this is something that if you're getting closer, working your way towards that, one of the things that you have to recognize is that when you're looking at rates of return, you have to look at it as the rate of return increases, normally the risk increases as well. We borrow money from private money lenders, and it's interesting. Most of the time we're paying, if you say that CDs, for example, that's probably the gold standard in terms or the bond market is the gold standard in terms of safety because it's backed by the U.S. government, right? That, if you've got a 0.5% rate of return and no risk, then as you go up, if you're making let's say a 7% rate of return, well, that's like a 14 times better rate of return than the 0.5% that you could get from a CD. But then the question is that how much does your risk go up? If your risk goes up 20 times, then that's probably not a good deal, right? If it goes up 10 times, well, it's gone up 14 for a return, but it's only gone up 10, then you've got some risk there. If it only goes up double, imagine if you had 14 times the return, but only twice as much risk. Most investors would probably do that. That's what you're really looking at here. What I like that y'all do to mitigate risk is there's typically a primary lender there, the first lien holder, which is the hard money lender, right? And so those guys are not inexperienced when it comes to investing. Most of these guys have lent on thousands and thousands and thousands of properties and have seen tens of thousands of properties. So you've got their set of eyes, and then you've got your set of eyes where you've looked at thousands of deals and managed thousands of rehabs, and you used to own a construction company that was huge and all that. So you see the construction side, the deal side. You've got your set of eyes, and then you've got the investor set of eyes as well. And then when you look at, not only is the property been viewed through a lot of different eyes, and it's all backed really by real estate. I mean, this is an asset-based loan, and what we love about real estate, it's a self-collateralizing asset. So it's not just the borrower and their credit score and credit worthiness and all that's back in the deal. It's the deal itself funds makes the deal credit worthy, right? And then you've got you on the hook, the hard money lender on the hook, and the investor on the hook for this loan amount. I mean, that's talk about mitigating risk. It's like, wow.
Yeah, it's about leveraging out everyone. So the first person who comes in, the flipper that wants to do it, we do a background check. We do a full background check on them. We want to know who we're partnering with, like everyone should. I always tell the line, I have lots of private investors who private lend me money for my own deals and investments that I have on the side, and I think 1 out of maybe 15 has actually ever run a background check on me.
Right.
Now, I'm clean.
Yeah, sure.
But I'm shocked that we don't. We don't
right.
do that more. So
right.
we run a background check. 2, if the hard money lender says no, then we don't do it. It's really that simple. They're the experts in the market. They are going to protect their assets, and if they're not willing to take the deal, then we're not willing to take the deal.
Right.
And then, like you said, 3, we provide support. Like, we're just working with some folks and explaining to them that, you're overspending on all your materials about 10 to 15%. Let us help you lower the cost of your rehab. And so we'll work with them right there in the field, boots on the ground type scenario. So, again, we're a partner, and we want to make this the project as most profitable as possible. And so we have to make sure that we're helping out the flipper who's doing it. We listen to the hard money lender's advice, and we make sure we know who we're partnering with.
So what can you share? What was the person doing to spend 10 to 15% too much in materials?
2 minutes.
They were buying retail. They didn't even know about like the Pro Extra Rewards.
Oh, wow. Oh.
I mentioned to them that I still have a personal account manager for Home Depot. Call her up. Tell her what we're doing.
Yeah.
Use these products. We'll get at least 13% off of everything, between the walls here in Home Depot.
Yeah. Yeah, and if you're buying $10,000 worth of materials, that's $1,300 that falls straight to the bottom line.
Exactly.
Yeah, that's fantastic. So, again, what's the best way to get a hold of JB Funding?
Sure. So, again, give us a shout at 281-915-0906. If you're an investor, it's extension 8. That's 281-915-0906.
1 minute.
So that means if you're an investor, you're looking to participate on the capital raising side, then that's the number they call. Is it the same number that you call if I'm looking to partner with you guys? I find a good deal. I'm a new investor. I want to partner with you guys to oversee what I'm doing. What's that number?
Best place to go if you're a new flipper and you want to partner with us is go to the website partners.jbfundservices.com. That's partners.jbfundservices.com.
Fantastic. Well, Robert, anything else you want to add?
Look forward to seeing you guys. It's going to be a lot of fun out here.
Excellent. Looking forward to seeing some beautiful weather out there.
It is. It's 60 degrees right now. It's beautiful.
See you on Thursday night.
All right, guys. Take care.
All right, thanks.
Appreciate it.
Bye-bye.
Bye.
You're listening to Right Path Real Estate Radio, 713-785-1817.
Mike's off.
All right, thanks.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that.
Like
you need
that.
a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you.
Hey, Andy, my shirt is blue, but it keeps going in on the green.
Will help save time and money. Benchmark
So,
has been in business for over 10 years, and we insure over
any
30,000
idea on what I could adjust on that?
Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353.
And then, Nikki?
That's
Yes.
281-569-4353.
I've got Brandon here. Want to do a quick mic check?
Or
Oh, yeah, go ahead and talk,
at
Brandon.
benchmarkbroker.com.
Test, 1 2.
Benchmark
Nikki.
Broker.
Bring him up a little.
All right.
281-569-4353.
Test, 1 2.
Or
1 2 3.
online at benchmarkbroker.com.
A little bit more.
All right.
Okay.
How about that?
Test 1 2 3.
That's good. That's good.
Do you
All right,
have
cool.
cracks in your brick?
Right, cool.
And we
Or
got
sheetrock that's coming apart?
Oh, we got 3 minutes.
Then you may have foundation movement. Due to our expansive
man.
soils in the Houston
Rock and
area,
roll. I like these
probably not a
transitions like
question of
this.
If you have movement,
We can do a sound
so
check. We can get it all going.
foundation check
Lickety
for a truly
split.
independent, unbiased
Probably.
foundation
Am I
evaluation.
too loud? Am I good?
Foundation Check
No,
has
you're
been in
good.
business
All right.
since 2009 and has completed over 1,400
We don't want to talk over this
evaluations.
ad.
We're not in the business of repairing foundations. or
Sounds like a good
selling
ad.
Yeah, it does,
unnecessary
doesn't it?
material, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702.
I think I've been meaning to get that redone for a couple months now. So
Yeah, they'll redo it for you.
3825, or you can reach
Although
us
it sounds great. I mean,
FoundationCheck.com.
if it's working, it's working, right?
That's
Yeah.
FoundationCheck.com.
Investor loans offering up to 100% financing are still available. You just have to know where to look. Look no further than Noble Mortgage. Noble Mortgage is a full-service mortgage company that's been helping investors since 2003. Noble Mortgage offers up to 100% financing to investors that covers purchase, repairs, and closing costs. In addition to private money, Noble Mortgage offers conventional loans, FHA, and even no-income documentation loans for both residential and commercial properties. Call and ask about our 5-point guarantee, which includes free pre-qualifications within 2 business days. Call 713
How much time left?
680
1 minute?
8100 or visit noblemoney.com.
1 minute,
That's
20 seconds.
noblemoney.com.
All right.
Our team has over 50 years experience in the mortgage industry. Call us today, 713-680-8100, or visit us on the web, noblemoney.com, noblemoney.com.
NMLS 292143, 8203 Willow Place Drive, Houston, Texas, 77070.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last
You
6
guys get the
years,
bus
Fast
tour
Track
all
has
lined up?
completed over 700
Yes, it's sold out.
projects,
Sold out? Good.
Which has helped us to
Good.
create
I know we'll be
3
there.
keys
Cool.
to success. Use a detailed scope of work
Yeah,
so that
I
everything
think
gets done.
Andre
Train
from
and
our
maintain quality
group. Have you met
crews
Andre?
so it gets
Yeah,
done
yeah,
on
yeah.
time.
He's gonna be-
Complete the work in a
he's gonna be
proper
leading
order
it.
so
Right.
gets done
Uh-huh.
fast.
Yeah, Jason and I'll
No
be
more
in
managing it
L.A.
yourself, no
Gotcha.
more doing the work yourself.
We're
Fast Track Remodeling really
doing a
does
sales
manage
training
it all.
on Friday,
So give us a
and
call
then
today
we're at
at
the L.A. RIA.
832-742-9992.
There's an all-day event there
Again,
on
that's
on Saturday.
832-742-9992.
And Jason's
Or
doing
reach
like
us
a
on the web
30-minute
at
talk, and I'm doing a 30-minute talk, and then
This is Business 1110.
Call Tom
and then
at
there's a mastermind kind of deal. Somebody will go in the hot seat, and then we'll be on a panel of experts answering whatever their biggest challenge in their business is.
All right, guys. Hot mics. 5, 4, 3, 2, 1.
Hey, welcome back. Welcome back. Right Path Real Estate Radio. 713-785-1817, 713-785-1817. I'm joined live in the studio with Brandon, my good friend Brandon. He's with Foundation Check. Welcome to the show.
Hey, Tom. Thanks for having me back today.
Yeah, absolutely. So what's new in the world of foundations?
Well, July seems to be pretty heavy on the rain.
Yes.
So we're above average normally where we're at. So,
yes.
Getting a few calls on we're seeing a lot of pooling around the foundations.
Right.
It can cause a lot of soil that's just not stable and can cause a lot of problems. So.
Yeah, because if there's a lot of pooling in the water, then oftentimes that creates erosion or it creates what are some of the other problems it can create?
Well, I mean, poor water management.
Yeah.
You know, if it's pulling right by your slab, then
Right.
then proper drainage, correct water flow away from the foundation. Lots of things can go on when you don't have the correct, water flow, water management is what we call it,
Right.
Around the foundation. So, yeah.
Yeah, what most people don't realize is that if the ground underneath the house rises and falls at the same rate, then, so in other words, you have 20% moisture in the back right corner and 20% moisture in the front left, and you've got 20% moisture underneath the whole thing, and that moisture content drops to 10% at the same rate. No problems with the foundation because it's rising and falling together. The problem happens if you have pooling in the back right and you have good drainage in the front left, or more, let's say water-sucking plants, right, like trees and shrubs and things like that. on the front left. Now you've got 20% moisture is going to 15 to 14 to 13 on the front, and it's maintaining 20% on the back, and it's that differential where it's kind of like a sponge. If it's it's dried out and shrinking on one side, and it's flat and plump on the backside, not a big deal if it's your kitchen sponge. It's a big deal if it's sitting underneath your foundation.
Sure, absolutely. One of the things that we like to educate our clients about is, when water or moisture passes through that area,
right?
Whether it's an increase or decrease, because both affect that foundation.
Absolutely.
So. Mm-hmm.
So here's how we use you guys, just to let people know. So anytime that we're buying a house and we've get it under contract, we know it needs foundation work. What we don't know is, is it going to be $3,000? Is it going to be $4,000? Is it going to be $5,000 or more foundation? We get you guys out to be able, because y'all don't repair foundations. There's no conflict of interest there. You're not trying to sell piers or pilings or anything like that. Right. You're just in the business of providing an engineer's look at what's going on, not just in the foundation itself, but all the things that would affect the health of the foundation. It's almost like y'all are like medical doctors for foundations. Correct. That you're not just looking at, hey, what's the symptom? The symptom is that you got some cracks in the wall or doors that are sticking, things like that. What's actually causing that? And so, yeah, we know that what's causing that is foundation movement, but what's causing the foundation movement? Is it trees? Is it moisture? Is it poor drainage? Is it and over time, if you've got a brand new house that's built, developers, what they do is they build where the house is going to be up a little bit higher, right? I mean, they want the water to drain to the left and the right and front and back, right? They don't want it to pool towards the house. But over time, as there's erosion naturally that occurs, as there's plants that we plant, all those kind of things that we do to make our house beautiful, right? That has a long-term effect, and it's not something that happens overnight. I mean, let's face it, the foundation doesn't move overnight. Sure. It happens slowly over time, and then y'all also see situations. I mean, I know we bought a house recently where it had previous foundation work, but they had overjacked the foundation. How often do y'all see that?
Yeah, I mean, it's pretty common.
You say it's 25% of the time? You think it's 50% of the time? You think it's 10?
No, probably between 15 and 20%.
Okay.
And a lot of it has to do when the foundation company gets, lack of a better term, a little lazy. And usually we see it only around the perimeter of the foundation.
Right.
They, when you lift the perimeter of the slab, it's pretty easy access to the foundation.
Right.
The guys can get in there in and out. And then what happens is they lift the perimeter. And then the middle of the house traditionally will sink.
Right.
We probably see that 15, 20% of the time, and it does happen. So, our analysis and our report, we're truly independent. So when you hire us, we work directly for you. We work with some of the installers. We also get a better game plan on what's going on. This past week, we actually had a pier and beam house that we were working on, and the pier and beam house actually was on the slope.
Oh, is that right?
And so
the slope of a yard?
Of a yard.
Okay, got it.
And
wow.
We were talking to our engineer, we were talking to the installer, and for the very first time, we actually went down in doing that pier and beam house due to the slope of the natural earth. It was non-cost effective. We couldn't go in there, remove the soil.
Right.
It was actually, we could get it within tolerances because of the natural grade. If we actually went down
on the high side, I assume?
That is correct, because what happened is that the high side of the house was on the slope side.
Sure.
And it was more cost effective and to get the home within tolerance and more like level if we actually went down. So that was a recent house that we did this past week, and kind of interesting because usually everybody's always talking about going up, up, up.
Right.
In this particular house, we went down, made it within tolerances.
Now, it's easier to go down on a pier and beam house than it is a traditional foundation, right? Because especially because you use this overjacking situation, and if the house has been overjacked, it's not like you can just pull some shims out and things like that the house is going to fall.
That's correct. Yeah,
it will over time though, right?
It will slowly, but it's not going to be cost effective for a flipper, an investor, and a homeowner's not going to wait around on it. So
the problem that as a flipper, what happens is that it might take 6 months for it to fall, let's say an inch, or longer. And so like we had a house just recently, I don't know if you remember or not, but it was overjacked about 4 inches in the back left corner. And so even if you took all the support, I mean, it's not like it's going to fall because the rebar, the structure, the concrete, all that, it develops memory, as we call it, right? And it's just not like you pull it down, it's just going to fall right back into place.
Right.
So we actually had to put 30 piers inside the house, and it was all interior piers because we got to bring it up to what that building tolerance is.
That's correct.
Yeah.
So, but that was That was a very good example of an overjacking. And is that all done? The foundation came out good, ready to roll?
Yeah,
good.
Foundation's all done. We've already sheetrocked. We've engineers been in. We've pulled out walls. We've rechanged the flow and all that kind of stuff. They're laying the base trim. I mean, it's rolling.
Very good.
We should be done with the house in the next 30 to 45 days and put it on the market for like $460.
Very good.
Yeah,
very good.
So what deals do you have going right now?
On the investor side, or
yeah, because that's the thing I want people to realize is that you're an active investor too. You're not just the owner of Foundation Check, and part of your story is that you were a client of Foundation Check. That's correct. I feel like all those ads, like at the Men's Warehouse. I'm not just a client. I'm the owner as well, right? So I'm not just president. I'm a client. You're not just the owner. You're a client.
Yeah, absolutely. I've been using Foundation Check's method for over 7 years now.
Yeah.
Foundation Check started in 2009. We've completed over 1,500 evaluations using our engineering analysis and our methods. So traditionally, we save a lot of money on the peer placement, to investors and homeowners because we have an unbiased opinion.
Mm-hmm.
We're also looking for the root cause on what is causing the foundation to physically move. It's not like we're just running out and hand drawing something up and then putting piers in and every 4 feet, boom, 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 boom.
Right.
We're really looking at the slab through a mathematical equation.
Sure.
Because we take raw elevation readings of the foundation after we draw it up to scale.
Right.
And then we run it through some proprietary software that it tells us if it's deflecting or tilting, and it gives us a percentile on where that foundation is at and if it's going to pass to engineering spec.
So that means y'all have seen literally thousands and thousands of foundations.
Yep.
What would you say is the average for investors, the average number of piers that you see a house needs?
Yeah, I mean, it's all based on square foot.
Absolutely.
If you're going to be between right around the 2,000 square foot mark, that's a ballpark. That's between 1,500 to 2,500. I would say a ballpark is 20 to 30 piers.
Okay.
But once again, it is all based on. I personally have literally walked thousands of houses just like you and Jason, and I've walked foundations and said, man, this thing's good to go.
Yeah.
And then we run it through the analysis, run it through the calculator, and it fails.
Right.
And then boom, had to do peer work. I've also walked the opposite, walked into thousands of houses and said, man, this foundation needs a lot of work. We run it through the analysis, run it through the calculator, and boom, it passes. And then we're able to do cost-effective approaches to make sure that foundation stays within the tolerances for when we go to flip it, or if I'm going to rent the home out for long-term longevity. So.
Okay, so what's the best way for guys to get a hold of you?
Sure, absolutely. Telephone number 346-702-3825. That's 346-702-3825. Or find us online at foundationcheck.com.
Okay, so on average, what would you say? Because are y'all typically called before the foundation company's called or after?
Yeah, we recommend, as soon as you get the foundation, as soon as you purchase the property and you're able to get us to where it's basically, I don't want to say demoed, but at least a lot of the material out of the house, personal effects. The best analysis for us is when we're able to take raw elevation readings on the concrete.
Right. That way you're not having to take into consideration flooring and things like that.
Absolutely. Floor covering, it slows us down a little bit.
Yeah.
And there's some variance, when you have thick plush carpet that's an inch tall, that's green and shag, and if it is best if that's able to removed, we're able to get to the solid surface and run our calculation analysis on that. That's the best case. But yeah, usually it's all done up front, and then we work with the installers to say, hey, this is what we see, this is what we see. The foundation company that did the pier and beam house, we had probably 2 to 3 conversations before they did that pier and beam drop, on what we saw and how we could get the slab, done. It wasn't just, hey, here's the report, go do it. Now, the majority of our reports do that, but there's always conversation. I'm always open, available via phone to discuss what we can do to make sure that slab is performing long term.
Sounds great. Would you say that most foundation companies really like seeing y'all's report before they get started?
Yeah, I think so, because it's our report is done on AutoCAD. It's done to scale. It's backed by an engineer. And that gives them the peace of mind. Hey, this guy.
I know our foundation company loves seeing y'all's reports, so it makes their job easier. So what's the number to get a hold of you again?
346-702-3825, or find us online at foundationcheck.com.
You should give them a call and use them. We do. All right, thanks for joining us,
Brandon.
Good, Tom. All right, thanks.
Appreciate
Have a good day.
Mm-hmm.
Hey, you're listening to Right Path Real Estate Radio. Stay through after the break. We're going to be talking about Benchmark Insurance.
Mike's off.
All right, thanks.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
Have you ever experienced the pain of trying to get MLS comps for your hot lead? If you've lost deals waiting for MLS comps, you can understand the frustration. How much would it help you if you no longer had to wait for a real estate agent to get you the info you need to close a deal? Propelio is a brokerage website that gives you instant 24/7 access to high-equity lead lists and comps with access to a network of the top real estate agents. Get an edge on everyone else. Get a free 7-day trial today by going to getmlscomps.com now. That's getmlscomps.com.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Are you an active real estate investor? If so, a real estate attorney is a crucial member to add to your team. Contact Ehlert Law at 346-231-1120. Ehlert Law serves clients in real estate and business law with principal offices in Houston and their acquisitions and dispositions. We are equipped to serve you in your residential and commercial real estate law needs. Contact Ehlert Law at 346-231-1120. We draft and review docs and structure transactions and represent you in disputes and litigation. Or choose one of our transaction packages to cover your sub-2, wholesale, wraps, or private financing deals. Our business and commercial services include business contracts, entity formations, and business consultations. If you need a reliable, dedicated firm to serve on your team, contact Ehlert Law at 346-231-1120. 346-231-1120. Paid for by Gerald Ehlert, principal offices in Houston, not board certified by the Texas Board of Legal Specialization.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results.
Yeah, can you do that?
The company concentrates on building those teams who operate with structure,
Can you do that?
and recognition for going the extra mile
All right.
for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon.
And I'll come in and do the last segment live.
Equal Housing Opportunity Lender. NMLS 514497.
This is Business 1110.
Call Tom at 713-785-1817 and look for us on Facebook Live at facebook.com/RightPathRealEstate.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817, 713-785-1817. Joined live in the studio with Benchmark Insurance. Welcome.
Thank you for having me.
Yeah, how are you doing?
Very good, very good.
Great. So y'all are an investor-friendly insurance company.
We are.
Yeah, so not all my background for a lot of
Can you
people
hear
don't
it?
remember. is
Yes,
that
my
I'm an insurance mic is background not live, myself. right?
No, you're good. You're good.
Okay, cool. Well, that's freaky. You are good. You are really good.
You guys were scaring me, so I queued up this old show.
Oh,
so
man, you're
Benchmark was
awesome.
one of the people.
All right, I'm going to step away from the mic for just a minute.
No, you're good. You have like almost 11 minutes.
Right, thanks.
Plus commercial break.
Right.
All right, bye.
All right.
Let's pass it, and then we'll read what's inside of it. That's always a great idea.
It's just bad. Still, nobody knows what the hell's going on with that.
Yeah, absolutely.
It's just a bad market on that end.
Well, there was a provision in that put me out of business right away, and I was also PNC licensed, but you always you never really know the direction that your life's going to go, and sometimes what looks like life deals you a lemon, you can turn into lemonade. And I know a lot of people that knock them down and out, but I wouldn't be where I am today if that hadn't happened.
Yeah.
And so I understand insurance probably at a higher level than most people, but it's interesting. There's a saying that I came up with is everybody wants the cheapest coverage when they're buying insurance, and then they want the best coverage when they're filing a claim. And if people, an ounce of prevention is worth a pound of cure, right?
Mm-hmm.
If people would just slow down on the front end when they're shopping for insurance and just think about what is it that I really want and be able to communicate that, have a conversation. Is that a struggle in your side of the business, having people sit down long enough and have a conversation, or do y'all force that situation?
Luckily, we've gotten out of the situation where we're dealing with price shoppers.
Okay.
We want to tailor – if we tailor the policy to fit the customer's risk profile,
right,
then we already know that what's gonna basically a target price that's going to make them happy at the end of the day. So the key factors that cause insurance to rise is basically what are we covering the property for?
Right.
How much of your investment do you actually want to cover?
Right.
The next thing is what type of risk concern you based on the investment property.
Right.
So is it in a bad area? Well, we're worried about theft. We're worried about vandalism. We're worried about the fact that it's vacant currently and it's in the course of construction. So all those key factors all go into play on the cost of the insurance.
So what are some of the big mistakes that you see brand new investors make when they first get started? What's the number one mistake that you see from an insurance standpoint?
From an insurance standpoint, generally they're buying builder's risk insurance and they're using it as a vacant property policy, which are entirely two different things.
So explain that to me.
So most people are on these insurance policies. Builder's risk is basically a policy that covers you in the course of while the house is in the course of construction.
Okay.
In the insurance company's eyes, they're seeing that property as, hey, somebody's always there. It's being monitored. If there is a water damage or anything may happen in that property,
if it happens at night, it's going to be caught the next morning.
It's going to be caught the next morning.
Right.
No problem, right? Well, basically, whenever you're done with the construction, now that builder's risk is technically not even a
current,
policy
right,
anymore. It's
right.
not current, and there's a gap in coverage at that point.
Right.
Well, let's say, for instance, you're putting it on.
So the moment construction stops, then the builder's risk is no longer really providing the right.
Each company has different provisions, 15 to 30-day provisions. But after that 30 days,
so in other words,
stuck.
if I've got a property, construction finishes, and now it goes into my real estate agent's hands, basically, and it's now been staged and all of that, and it's been on the market for 60 days or 90 days, or we start rolling, unfortunately, into 120 days, something like that, and I've got a builder's risk policy. What you're saying is that I have a water leak or something like that, and it goes unnoticed for 5 or 6 days. The insurance company's like, wait, what?
Right.
Right.
So any reason you give an insurance company to deny your claim?
Well, to follow the letter of the contract, right?
Exactly. Especially when it's not in your favor.
Yeah, exactly.
And this is one of those provisions where I've seen that hurt a lot of our investors. The second thing is water damage.
Yeah.
Water damage coverage is not flood coverage. Water damage coverage is a pipe breaking or any water damage from the inside of the house, not water coming from the outside in.
So it's not rain with water rising. It's not street level rising, anything like that.
It's a supply line behind the toilet, or your drywall guy hit a nail into your pipes, and the minute that you turn on your utilities, you realize that you have about a foot of water all throughout your house.
Yeah, that stinks.
That could be that's costly. You're talking about anywhere from $30,000 to $35,000, new floors, new baseboards, new drywall, and the drying
could be
out.
New bottom cabinets, which means new countertops. Yeah, all of that.
So that gets really pricey, and most builders' risk policies do not cover that type of loss.
Wow. Okay, so Benchmark Insurance, what's the best number to get a hold of you?
You could reach us at 281-569-4353.
And the website?
And the website is insureinvestors.com. INSURE investors.com.
Yeah, that's INSURE, not the drink for seniors, right?
No,
not the insure
not
drink.
the EN. No.
Yeah, not the EN. It's INSURE. Okay, insureinvestors.com. And so is Houston your only market?
Houston is not our only market. We write nationwide. This product is very competitive nationwide, from what I'm understanding. We've most recently received some calls from Missouri, from people who watch this show. We've had people out in the East Coast who we've been told that we're about 40% less on our package.
When you say this product, what you're talking about specifically, y'all have a package product designed specifically for investors. So,
correct.
Like, at any one time, we're moving properties in and out of our inventory. We're on average, we've got about 20 closings a month that we have. So 10 that we're buying, and that means that hopefully 10 that we're selling, right? So it's a constant turnover of, and we may have a property for 3 or 4 months. And the old way we were doing it is we were buying individual properties or policies, and so we had to decide, do we want a 90-day policy on this, or do we want a 6-month policy on this? And, we never could get the timing just right. And so we always felt like we were overpaying. One of the big benefits of this policy is you can add and delete on a daily basis, do it online and all of that. And then so you're only paying for the properties that you have in inventory. And
Absolutely.
It also flexes. It has a provision for if it's a rental property, it's covering you for rental perils. If it's a builder's risk situation, it's got the builder's risk perils. If it goes to a vacant dwelling, it automatically shifts. It's going to cover you under all of those different scenarios. And peace of mind for an insurance guy.
Absolutely.
Yeah.
And peace of mind for an investor who's
Absolutely.
very busy and has multiple products. So whenever we got into the portfolio business, we made provisions in the contract that basically stated that we want the insurance to be applied to every level of the investment process.
Yeah.
From the time that you're doing construction to the time that you're doing that the property is vacant, and to the time that it's occupied. It's covered for the same price, which is unlike any other package out there.
Yeah, absolutely. So, again, the website to be able – because you can actually pull a quote up on the website,
Absolutely.
right? So you can go free of charge, like, hey, I don't necessarily want to know that I want to call in, but I'd like to be able to see what I'm paying versus what y'all would charge. So what's the website again?
Website is www.insureinvestors.com.
www.insureinvestors.com. So I'm going to post that on our Facebook page right now.
Please give us a call, and you can actually quote your rates online. It's a somewhat of a user-friendly platform. It's being improved quite a bit.
Yeah, anytime you bring a new platform out like that, then you give a chance. You put it out there, make it public, give people a chance to break it. You're like, oh,
Had no idea. Had no idea. I mean, at first we were using it just for an internal tool to be able to quote insurance policies, and then we realized that the need of having a full e-commerce platform is gonna be a big thing for us. So currently we're developing an iPhone app and a new design for investors to be able to manage their entire
like
portfolio.
$50, right?
Yeah, cheap. We're the only insurance broker with the full house IT team, so it's expensive, but I think it's something.
How I know.
Oh, I know. Look at this place.
Yeah. So, but you know what? That's what investors need. I mean, investors need it to be simple, especially brand new guys or experienced guys, to be able to go online. I mean, what would it be like to not have to pick up the phone? You're walking a house for the very first time, and you're like, I wonder what insurance is going to be for this particular property. You can put the property address in, put all the details, square footage, and all those kind of things, I'm sure, right?
Correct.
And be able to, and the ARV or whatever, and be able to go, bazam, based on the zip code, this is what your rate's going to be. So that's fantastic.
And based on the address, we're going to pull all the analytics for that property. So basically the year built, the square footage, the rental income in that area, along with the property appraisal. So within, you basically need to customize the package to fit your specific risk profile.
Yeah.
And if you want to go, we basically insure our properties for reconstruction costs, what the insurance company is willing to replace that property for.
Right.
So
Not
that's
necessarily what you bought it for.
not what you bought it
Yeah,
for, because you have the lot value involved, and we're not covering concrete.
Right.
We're not covering land.
Yeah, rarely are you ever going to have to replace the slab.
Exactly.
Yeah, that's going to be
Exactly.
unusual. And you never have to replace the land.
And that's generally why most investors are paying so much on their insurance, is because they're over-insuring. They're
Yeah.
insuring well over $120 a square foot.
Which what people don't realize is that for smaller claims, that's going to reduce the amount of the claim itself because that's going to raise your deductible.
Exactly.
Because if you've got
Exactly.
a 1 or 2% deductible and it's only going to cost $150,000 to rebuild that structure, and you're insuring for $250 because that's what you paid for it,
right?
And you're wanting to protect your lender and all those kind of things, which is all good, but the land may be worth $100,000 between the land and the slab. Well, that means if you have a 2% deductible, you've got a $5,000 deductible.
$5,000 deductible.
Where if
Exactly.
you were reducing it down to the $150 that you're really exposed for in terms of complete rebuild to rebuild everything, you're only going to have a $3,000 deductible.
Correct.
And it's more likely that you never have the full $250 claim. It's more likely that you're going to have a $10,000 claim or a $15,000 claim or something like that.
Exactly.
And you better have a $3,000 deductible than a $5,000. So these are the kind of things that Benchmark Insurance can help you understand so that you're making the right decisions, so that you have the right type of coverage. Pay for the insurance that you need, not for what you think you need. So what's the best number to get a hold of you guys?
Best number is 281-569-4353.
And if you want to visit our Facebook page, it's Right Path Real Estate under Facebook.com, and I've posted a link right there. It's insureinvestors.com. Thanks for joining us, man.
Thank you.
All right, have a great day.
We'll see you.
You found or inherited a great investment property.
All right, we're on
Problem
track
is,
now.
You don't know
Yep.
how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Rehab loans, conventional loans, FHA, and no-income documentation loans can seem scary unless you have the right mortgage company to guide you through the process. Since 2003, Noble Mortgage has been helping investors just like you. Whether rehabbing houses, buying your first home, rental, or commercial property, Noble Mortgage offers up to 100% financing. Call Noble Mortgage at 713-680-8100 or visit noblemoney.com. That's noblemoney.com.
NMLS 292143, 8203 Willow Place Drive, Houston, Texas, 77070.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts, Benchmark Insurance Group of Texas, 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
Have you ever experienced the pain of trying to get MLS comps for your hot lead? If you've lost deals waiting for MLS comps, you can understand the frustration. How much would it help you if you no longer had to wait for a real estate agent to get you the info you need to close a deal? Propelio is a brokerage website that gives you instant 24/7 access to high-equity lead lists and comps with access to a network of the top real estate agents. Get an edge on everyone else. Get a free 7-day trial today by going to getmlscomps.com now. That's getmlscomps.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
Did you know that there are over $24
1 minute.
trillion in retirement accounts in the U.S.?
Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
This is Business 1110.
Call Tom at 713-785-1817 and look for us on Facebook Live at facebook.com/RightPathRealEstate.
Hey, welcome back. Right Path Real Estate Radio. So we've got Jason and I are going to be at the next couple of events. You can go to rightpathrealestate.com. That's rightpathrealestate.com. Check out our events. Our next event in town is going to be Thursday, August the 3rd. That's going to be right here in Houston at our offices at 11451 Katy Freeway. If you want to learn how to find the right repair numbers, what it's going to cost to fix your property, then you need to go to Right Path Real Estate. Register for the event. It's going to sell out. We have a bus tour that we're going to be showing people properties that we have currently in the process, in the works. We talk about how we found the deal, what we're doing to rehab the deal, how we negotiated, all of those kind of things. Unfortunately, that bus tour is already sold out. So when you find out that we're doing a bus tour, you definitely want to sign up early because it will sell out. Our last weekend retreat sold out. We had people the day before the event because we had an event on Thursday night at our office. Then we did our weekend retreat on Friday. And there were people on Thursday night saying, "Oh man, I'll do anything. I'll sit on the floor, whatever it takes." We were sold out. We had no more room to take anybody. So we're not allowed to do standing room only. So that was an issue. And the next weekend retreat in Dallas is already filling up. If you're up in the Dallas marketplace, you want to know about the weekend retreat, go to rightpathrealestate.com. That's rightpathrealestate.com. And then this weekend, if you're in the LA area, you need to Google where we're going to be. I believe that's on our website as well. Go to Right Path Real Estate. Colby and I are going to be doing a sales class for the local RIA there in LA on Friday evening, and then we're also going to be at an all-day event at the LA RIA on Saturday. And we're going to be talking about, I know Jason's got about a 30-minute talk. I've got about a 30-minute talk. And then we're also part of an expert panel to help, like a mastermind type program where people are in a hot seat and they're going to be talking about their number one problem that they face in the marketplace. So at Right Path Real Estate, we're traveling around the country because our message is truth about buy, fix, and flip, about wholesale, about buy and hold real estate investing. We like all three of those in the single-family space. We don't like multifamily right now. We're not big on commercial just because we feel like that those are more like buying a business. And if you're going to buy a business, I always ask the question, do you want to buy a business low or do you want to buy it high? Everybody says they want to buy it low. So you have to understand where the marketplace is in terms of overvaluing that asset. Anytime that an asset is super hot, everybody wants to be buying it, that's when you want to be selling. Anytime nobody wants to be buying it, that's when you want to buy. So that allows you to buy low and sell high. Right now, there's too many people that want to buy multifamily. So people say, "Oh, but I'm smarter than everybody else. I'm going to find a deal." Well, what I can tell you is there's no deals out there in multifamily right now. That's why anybody that's experienced, including some of the top gurus, they're not putting their own money in multifamily right now. But hang on, because in about 2 to 3 years, it's going to be a tremendous buying opportunity is what we're predicting 2 to 3 years from now in both commercial and multifamily. But right now is an incredible buying opportunity for single family, for buy and hold, for flipping. And anytime that you can buy a house, you know, that needs $75,000, $80,000, $90,000 worth of work and buy it at a discount, fix it up, sell it, you're adding value to the community, to yourself, to the end buyer, and to the person that you're selling to. So you've been listening to Right Path Real Estate Radio. Our website address, again, is Right Path Real Estate. Check us out. There's all kinds of blog content, all kinds of free content right there on the website. Look forward to seeing you tomorrow.
All right, mic's off. Have a good day.
Thanks, you too. Bye-bye.
Bye.
Thanks, Facebook folks.
You've been listening to